Nasdaq Composite, the Russell 2000, and the Biotech Index at this point. Again, same story here. I want you to all to focus. I need you to listen to all the videos from the 7th or the week of the 7th of August when the markets were at lows, and also the 11th or so. So you can basically draw, connect the dots and understand what's going on. The Nasdaq Composite is on a tear. This is breaking into new highs. This is an extremely positive, powerful bull chart. At this point in time, as we can clearly see, we have crossed over the green line. We are touching the upper Bollinger here on the daily, and there could be some minor consolidation as we get overbought on the daily basis. However, keep in mind that we can have a quick reset intraday, mind you, intraday on these overbought indicators, and then continue the journey upwards. The key inflection point that happened here, and I've shown this many times, is this point where the 50 crossed over the 34 moving average. And then we see that, and I've talked about this before, so I'll repeat again, take credit for that, that once you see the 34-day moving average curling up and the 50 keep on moving up on an upward trajectory, that's a very powerful signal. What do we see on the internals? The basic internals are telling us that there's a third day of the histogram rise. So if you look at it, if you compare this to, like I've done repeatedly in my other charts, to what happened excuse me, let me just get this out. Okay, so for the Nasdaq, this is the most the pattern symmetry that I can think of. This is similar to this. Look at this, okay? And this particular pullback was actually a shallow one. If you notice, this was a shallow one. This never came close to what we incurred in April 14th. That's when I started my service on tax day, and the world was falling apart, and I called a reversal on that particular day. You can go back and look at all the posts and the records and the charts and everything, end of the day reports. You see the same thing. So this is similar to what happened in November of 2012. So once that happened, and then we had this consolidated pullback, small one, and the whole world was screaming and shouting, including all the media and this, majority of the newsletter writers and such. It really was just a quick cup formation, if you want to look at it this way, up high level cup. That cup is now broken out, and at this point in time, you would have to go on the weekly chart to see what might be occurring. So, looking at the weekly chart, we can see that it's got a little bit more room to move, but we're getting up there where we what I consider to be an overbought condition, where things do need to ease back a little bit. All the trend lines are in place. The standard deviation, or in simple English, how far the markets moved away from the moving averages, is getting somewhat wide. If you look at it from the from the 50, if you look at it from the 34, so what basically it might need to do is come down here, test this acceleration line, this blue line, and then move up from here again. Or if we break this, then we're going to come and retest the lows of last week. And let me get these things out in gear. Yes, this is the lows of this is actually the lows of April. This being the weekly chart. This was the ugly red bar from the 1st of August. And if you notice, we don't even see any hiccup for what happened on Friday, which was the 15th. We don't even see, look at that. That's just, the Nasdaq was strong, and it was just, you can't even see that there was this massive intraday pullback on that, which threw a lot of people off, including me, in the Ukraine-Russia news. So very positive chart here. We are overbought, so I expect some consolidation. Looking at what we see, let me see here, put that up here. Looking at this is what I could be going on, and again, a drop like that intraday or on a 1 or 2 day basis would be considered healthy. If we break below this, then we are going to come down and test the 50 here, the rising 50. And worst case scenario, we could be looking all the way down here, which would feel quite ugly, mind you, if we come down here and test the rising 34. But that would be a nice reset. And again, we would be hearing the same old Mayan songs and the doomsday callers about the market. But this is all within the framework of a rising market. Even if we come down to that level. So let me draw this line here. This, by the way, just so you all know, is the rising trend line from 2009. I'm going to reserve it for tomorrow, the day after, to show some longer term picture, but you can clearly see where we are, where we are since 2009. Let's take a look quickly on the hourly chart. On the hourly chart, it's a clean breakout. There's really nothing much to say, but again, we are well above the Bollinger, and every time we go that much over the Bollinger on any indices, you will have a consolidated pullback, and that's just a given. It needs to do that. You sprint. When you sprint hard, the 200-meter dash, you got to slow down, take a couple of deep breaths, and that's just the way it goes. This business is a marathon, not a one-day sprint. So this is the level that I am looking at. There's a gap here, and this gap probably, this was today's gap, and this gap very well could be tested. Okay, it's just my, just my feeling. There is a large gap here from Friday when we did this, the crash on Friday and back. And let me just see here. So this was Friday, which was absolutely crazy, okay? And then we did this. So at this point, we could very well come down. There's a wide gap here. This gap could very well get filled. It could even come down here and move from here. So again, all these scenarios are in place at this point. But anything well above the Bollinger is going to reset, and I believe that's going to happen. It's going to happen fast, and you got to take advantage of it. And I'll obviously be trying to help as much as possible on the real-time live Twitter feed, and like I always do. So let's see here. Let's move on to the Russell 2000. We have 2 minutes left here. I've said this, and I'm saying it again, that the biggest money, and I've said this weeks ago, is going to be in the Russell 2000. So if you listen to what was going on, and I've played this systematically without taking any outsized aggressive positions overnight, which I used to do quite a bit, but given the fluidity of the markets and the global external events that are taking place and the overseas market reactions, I cannot risk large overnight positions in this, in what's going on. So, saying all that, very large falling wedge, shown this many times, and I'm going to draw this out. Galloping horse, whatever you call it. This looks like a horse's head, right there. We broke out over that. We came down, tested. We came up. Then we crashed almost on Friday, and this is where we are. At this point, the maximum move would be around 1172, and I believe that that's pretty much what's going to happen. So at this point in time, we are somewhat overbought, and I believe that this channel does get filled, which moves up here. There's a gap here. I've shown this quite a few times again. There's a small gap. This gap just got filled today. This one. There is another gap up here, and that also coincides with the top of this channel. If we break above that, we are going to test new highs. So that's the story with the Russell 2000. And please look at all my intraday charts to see the overall picture as I'm explaining it. The Russell 2000 US Small Cap Index is back on the move, and this and let me see if I have time for this. This is a pattern symmetry that is looks like is getting played out. Might go as high as the 1200 level. I don't think so, but let's see what happens. All right, let me move on to the last of the video cast to cover the biotech index